Investing versus investing with a purpose. So I think a lot of people confuse investing with speculation, right? So they want to buy some stock, they want to do, cryptocurrency is the flavor of the month. And sort of a lot of investing seems to be buying and selling stock or buying and selling that kitna deti hai, where returns becomes the only reason you're investing, right? And I think that's a very bad way or bad approach to investing. It will lead to not optimal outcomes. It might give you short-term returns, but you will have, there's a fair chance that this huge increase in demand, which is phenomenally good for the country, that more people are investing, but I don't know if they're investing with a purpose, right? Because it all seems to be around returns, it all seems to be around short-term gains. Now, if you're investing with a purpose, it depends on the purpose. Like I said, first and foremost, create an emergency fund, which is 6 to 9 months of your expenses, which has got to be in liquid funds, so it's easily accessible. It's largely risk-proof, keep it aside. Secondly, create a corpus for your one-time, slightly larger ticket expenses. So you've taken money aside for your operating expenses on a monthly basis, paying rental, eating food, little bit of travel, buying those clothes, but larger expenses, right? You might want to upgrade your laptop every 3 years. You might want to buy a bigger phone. You want to take that international holiday as you go up the value chain. Those you need to keep into slightly what I would call debt instruments or the equivalent of that, right? So which are slightly ultra short or short-term duration debt funds. Then is the real money, right? The real money which will help you retire later, which is for your children's education, which is for you to retire peacefully. And as I keep repeating, and there are enough examples which show you, I'll just give you an anecdote. Somebody who's 25 years old and starts investing today, and somebody who's 35 years old and starts, and this person invests, say, 10,000 rupees or 1 lakh rupees a year for the next 10 years, and then he stops. And the next person starts when they're 35, and they both don't touch the money till they're 60, they keep investing. The person who invested for the first 10 years, and for whatever reason stopped, will have 3 times the money at a decent return of about 10 to 11% than the person who starts only at 35. So starting early and remaining invested with a purpose is really important. So investing is a lot more about sort of goal-driven, asset allocation-driven, risk appropriate, rather than just returns. So I want to differentiate money. Savings is just taking money away from your income and putting it aside. Then investing it with a purpose is what we recommend at Scripbox very heavily.